Hi everyone, welcome to today's video where we're gonna have a look at our expectations going into AMD's earnings on Tuesday after market close. The most important segment for AMD will obviously be data center due to the increased demand in data center, mostly from the AI GPUs, which you will see on the blue bars on this chart. But also importantly, AMD is still very competitive on the red ones, EPYC CPUs, so general purpose EPYC CPUs, which they are competing mostly against obviously Intel. And you can see on this graph here that they have just taken quite a lot of market share, AMD in red, Intel in blue. You can see that over the past couple of years, AMD is just completely eating into Intel's market share. Now, Intel until now have defended their market share through price control, so essentially they cut down on their margins completely just to try control AMD's market share gains. But at these kind of levels where Intel are barely making any money on their general purpose CPUs, I would say that we are at the threshold where potentially AMD could utterly destroy Intel's market share. And why do I say that? On the general purpose servers, looking at the roadmap of the two companies, AMD is really strong currently on the server side. So as you can see on this table here in 2025, AMD is going into 24 and 25 with Turin based on TSMC 3 and 4 nanometers and Zen 5 cores. Intel, however, is still stuck on Granite Rapids and Sierra Forest from early 2024. They are closing the gap with AMD, but they are not they are still behind AMD, I would say, on average workloads. There might be some specific workloads where Intel is kind of beating AMD, but not on most of the workloads. Like 80 to 90% of the cases, AMD has a clear lead. Now, the lead has been kind of reduced a little bit since, let's say, 2 or 3 years ago, but still AMD is in clear lead. And going to, late this year and early next year, I would say that I don't see anything that's going to change the market position. AMD is going to utilize TSMC N2 and N3 on Zen 6. I have to update this table to N2 now. We've just recently got confirmation from AMD themselves. And Intel is waiting for Clearwater Forest on Intel 18A, which just recently got pushed back into obviously 2026. So there's nothing on the market that gives the signal that Intel is going to be able to suddenly, completely stop AMD's market share gain. So going to this table again, you can see on the graph that the red parts are not going up as much for the obviously server CPUs, but they are still going up. I mean, in Q1 of 24, we were at 1.7. I'm expecting AMD to be at close to 2.5 billion by end of this year, potentially even more. But going on the blue ones, you can see that the market share gain for AMD started in Q4 of 2023 since they introduced their MI300 chips. Now, MI300, to be honest, is not a fully focused chip on AI like the chips that you've seen from Nvidia, H100 and H200, and also recently Blackwell. MI300 is balancing between AI workload and high performance computing, for example, for weather forecasting and complex engineering modelings. And those two workloads are going against each other, so you cannot have a chip that is good on one and good on the other. So you have to compromise, which means that you get this situation of a chip that is kind of okay in both sides, but not perfect or specialized in one single workload. And that is the problem, in my opinion, for MI300. It's been showing that it's the fastest ramping AMD chip ever. They sold around 5 billion last year in 2024, which is great. Now, in Q1 of this year, I would say there's a little bit of a stagnation. You can also see that stagnation according to my tables, like Q4 of 2024, I have MI300 revenue for AMD on this row here at 1.9 or so billion. And if you go now to 2025, you can see essentially there's the same number, 1.85. So I would expect that due to the fact that MI300 is now 1 year old, more than 1 year old, they are transitioning to MI355X or MI350X. But in between the transition, they also have this chip called MI325X, which is essentially the same compute chip of MI300, but with additional memory capacity. So you can see that this newer middle chip is MI325, has 256 GB of HBM3 memory, whereas the first one, MI300, had 192. But again, the real deal is not MI325X, it's just a slight update of MI300. The big one is MI355X. Now, in addition to MI355X, for real taking the fight to Nvidia, because it's going to be much more focused on AI workloads and less focused on HPC. And also next year, AMD will use MI400, which will be another step closer to Nvidia. So I think that AMD is doing everything right. They're focusing on the software, so the ROCm. So I would say that going back to the graph again for the data center. So going to Q4 of this year, like with 4.5 billion. Now remember, I've written here MI300, but it's actually like MI300, 325, and MI350X combined. So for Q4 of this year, it's gonna be 4.5 billion sales. It looks a lot. I don't think that's actually too aggressive. AMD is competing with Nvidia. The market is growing. The players out there, for example, look at this article here. We got recently Oracle to build cluster of 30,000 AMD MI355X GPUs. That's essentially one single customer, right? Then you have Meta, then you have like OpenAI and all the other small players like Hotel, also recently a small company. So both from the large hyperscalers to smaller customers, AMD is, I think, gonna take market share from Nvidia. Now, how much market share? I don't know. Long-term target for me is that AMD is gonna have roughly 15 to 25% market share, obviously at lower average sales price because they are not the dominant player. But what would that mean? We know that Nvidia, for example, if we go to this other server table that I show you, Nvidia is currently averaging like low 25 to high 35 billions a quarter on just AI GPUs, right? That would mean that AMD, if they get 20% of that market per quarterly basis, they could easily have 7 to 8 billion just only from the AI GPUs. So once going back to my table here, you can see that 4.5 billion, I mean, there's room to double that within a year or two. So AMD is nowhere like stopping. And again, the EPYC sales is also gonna continue to go up because there's nothing from Intel side stopping AMD. So specifically for Q1, that's going to be reported in a couple of days. I mean, AMD guided themselves that they're going to be a slight reduction in revenue top line to 7.1 plus minus 300 million. I would say that they are usually very in line with their guidances. I know that all this tariff stuff that has happened, that puts a little bit of uncertainty on this specific one and probably Q2 as well. But let's pretend that tariff thing doesn't exist right now and go on numbers that we would have done anyways. You can also look at this other graph there, AMD revenue by segment. You can see that the blue one within data center is going to continue to dominate. It's going to be more and more part of AMD's revenue. So this company is becoming more and more data center focused, the same way that Nvidia did, still to a lesser degree, but they are going to be a data center main company for sure from now on. Looking also at the client segment, I think there's a lot of news out there. For example, look at one of AMD's VPs, vice presidents, Jack Hugh, that is showing Dell laptops from AMD with AMD's Ryzen AI APUs. And this one is quite interesting. Dell historically has been a huge Intel customer. But having Dell on AMD as well is going to help AMD to gain market share on the consumer side. And when I say consumer side, obviously that's the client red bars there. And now looking at Q1 numbers, you can see that I expect AMD to have 7.2 to 7.3 billion in revenue. Data center being 3.8, somewhere around. Client coming down a little bit from Q4. I think it's quite normal. Like client usually goes down from Q1 compared to Q4. Then I expect gaming to get some bit of a, rebound again, which compared to the lows of Q3. We saw quite a strong increase in Q4. Still very low numbers for AMD's gaming. Remember, look at this row 6 here. You can see that traditionally AMD has like 1.5 to almost 2 billion in gaming revenue in good times. So I expect there's a lot of headroom to grow in there. And knowing that AMD is taking market share like from Nvidia on the gaming GPU, I would say that, the reception for AMD, I have never seen AMD gaming GPU being so well received by the reviewer and by the gaming community, to the extent that people are essentially stopping buying most of Nvidia cards and stockpiling AMD cards, and to the extent that actually for once AMD's cards are like selling at higher average sales price in relation to Nvidia's, which a lot of them are barely even they're just sitting on the shelf. You can also see on this article here that overall x86 CPU market share, AMD sits just around 25%, which is 4.3% up year on year. Then interestingly, looking at the gaming, right? Look at this. AMD's gaming revenue according to Steam. Obviously, Steam is not the most exact barometer, but I would still say that historically AMD would be at 5 to 10%, and now they're at almost 40%. So the gaming community is for sure taking AMD and buying AMD compared to both Intel and Nvidia on CPU and GPU. You can also see Mindfactory, one of the biggest retailers in Germany and Europe, 92% going to AMD. So again, AMD is like gaining market share left, right, center. They have less than 10% market share in the AI GPU. So there's everything to grab more market share in essentially every single space for AMD. And let's not forget the other segments of AMD. So we mentioned gaming, right? Now embedded. What is AMD's embedded segment? But it's, Xilinx, the best FPGA company on the planet. And they've been struggling a little bit over the past 5 to 6 quarters due to the automotive business being in a kind of difficult moment, since automotive is partly one of their biggest customer base. But now with the automotive rebounding, I would say that, as the management has also said, Q4 of 2024 and onwards, they would start to see a slow but kind of steady comeback for the embedded segment as well. And that market, actually, they have quite nice operating margins. So when you look at all of this, like gaming is growing from a very weak historical numbers. So gaming can only go up, in my opinion. Embedded will go up, but slowly. Client is difficult to judge, but my expectation, let me show you, like for example, all the way to Q4 of this year. I would expect client to be 2.7, 2.8 billion revenue by Q4 of this year, which is substantially higher than Q4 of last year, which was already a record at 2.3. So again, it's not only a data center company, right? Obviously, as the data center growth, as I'll show you on this other graph, let's go back again and let's look at the actual graphs. Again, you can see on this graph, it's going to be more and more a data center company for sure. But AMD is not Nvidia. Nvidia is essentially 95% data center company, right? Even by Q4 of this year, AMD will have maybe 40% of revenue from other segments, which I actually think is a good thing. It's a more diverse company, so I think they're gonna weather any risk or downturn in AI GPUs much better than a company like Nvidia, which is like sky high valuation. Again, when I say sky high valuation, I don't mean that the fundamentals is higher. Nvidia is quite cheap actually if you look at the price to earnings ratio. But the problem is that this is a 2.8 trillion company compared to AMD at 160 billion. They are facing competition from AMD, and AMD only has 10% market share, Nvidia has like 90% market share. So I don't think it's realistic to expect that Nvidia will have 90% market share in the long term. Even if AMD take 10, potentially like comes up all the way to 25-30% market share, that's going to put a little bit pressure on Nvidia's, average sales price. And I think that's going to affect their margins. And once the margins got hit, they're going to have much, the price to earnings ratio is going to go much higher up because the earnings is going to go down due to the margins going down, right? So I would say Nvidia is not expensive on the basis of fundamentals, but they are much higher risk for Nvidia. They are so focused on AI data center. And if the hyperscalers like Amazon, like Google, like Meta, like Microsoft start to utilize their own in-house design chips more and more. Some of them are doing quite clearly. And in addition to that, the likes of Oracle. Oracle showed they bought AMD at 30,000 MI355Xs and Nvidia at 60,000 Blackwells, which means that they split 1/3 to AMD and 2/3 to Nvidia. And that's already tell you that unit volume market share for AMD on Oracle as a customer is around 30%. So I think there's room to expect that AMD is going to gain market share for sure. There's a couple of things stopping AMD gaining market share. It's the software stack, the CUDA mode that everyone talks about. Although I think that it's a little bit overblown because AMD is kind of looking that they are really prioritizing ROCm. But also the connectivity. Like when you talk about, this, for example, Elon Musk cluster at Grok, at Colossus, I think it's called 100,000 units, right? AMD cannot do that right now because they cannot connect these like GPUs. They can connect 8 of them, then they can do some tricks to get to 1,000 or so, but they cannot connect like 100,000 GPUs the way that Nvidia does it right now currently. So this is a bottleneck for AMD because despite AMD honestly on a hardware basis having the better chip in my opinion, like if you just look at it on pure hardware design, I would say that AMD at the very least is competitive to Nvidia and most likely is ahead of Nvidia on design and pure mechanical design. The problem though it is that Nvidia, despite having, let's say in theory, a lesser of a chip, they can connect them together in like the tens of thousands, The problem is that Nvidia, once they connect their chips together, like in the clusters of thousands, like tens of thousands, potentially a couple of hundreds of thousands, they're still like very efficient, close to the maximum performance levels. Whereas AMD, if they're gonna connect like tens of thousands of GPUs with the current technology, with the interconnect technology that they have, they're gonna lose a lot of the performance due to latency. And that is something that they are working with together with the obviously UA Link, together with Broadcom, Intel, and Apple, and Microsoft, and a bunch of other companies. And in a couple of years, I think they're gonna also close that gap substantially. But I think that in the close term, it might be that we are looking at the area that MI355X is very competitive on paper, but on a single chip to chip comparison, not on a cluster to cluster comparison. That could be one single problem with AMD, like stopping them gaining substantial market share, like going to 30 or 40%. But a couple of years from now, if they manage together with Broadcom, Microsoft, Meta, and Amazon, and all the others, combining the effort to dethrone Nvidia's NVLink, then obviously AMD at that point could easily get 20 or 30% market share. So again, no matter how you look at it, I believe it's just a question of time before AMD gets market share. Now again, falling back to the point of the video, Q1 of this year, AMD is firing on every front, right? The only problem is probably that some people I would say are not prepared to see that Q1 is gonna be not an increase in AI GPU sales. On this red segment, you can see, for example, that I've looked at AMD's data center sales, Instinct, i.e. AI GPUs, and then EPYC CPUs. You can see that EPYC is obviously higher up still until Q3 and also Q4. Then actually on Instinct sales, I'm expecting AMD to regress a little bit this quarter, or at the very least stagnate. And then maybe a little bit uptake in Q2, but significant uptake in Q3 and Q4, right? So I think a lot of people are going to be disappointed with Q1 due to the single fact that they're going to talk about, why in the bull run of AI GPUs, they don't increase their Instinct sales significantly quarter over quarter. But I think it's just that MI300 is quite old now, and we are in the transition period between the first generation AMD AI GPUs to the second generation. That's the single factor. But anyways, I think this is how it's gonna look like, 7.3 or so billion. Due to the tariffs, maybe we can think about 7.1 billion. But in the long term, I think this is a very, very good company to look at. Anyways, thanks for your time. Please like and subscribe. I would love to get your comment in the comment section about my expectations and your expectations. Do you think the Q1 numbers are too high, too low, or maybe that's what you expect? And also, do you expect that AMD could break the 10 billion revenue by Q3 and maybe even more by Q4? So anyways, thanks for your time and see you in the next one.